Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 3rd of February 2020, so yep, welcome everyone. Welcome to this first trading day of this week, of course, of February. Yep, as always, guys, I hope you had a fantastic weekend. You are all feeling nice and relaxed. So right now, basically, we'll jump into the charts. We'll have a quick overview of some of the instruments, as the usual stuff. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. So I'll just give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump in, quick mentioning of our JFD YouTube channel, here to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, I believe we can find some useful stuff here for yourselves, guys. So feel free to visit us here on jfdbank.com and click on the research tab right there. Now then, let's jump into the charts. Now, the first one I want to touch on here is the Shanghai Composite. Now, well, as you are aware, the Chinese markets opened up this today, and well, I mean, they had to do a lot of catching up with the rest of the indices because they were closed. The Chinese ones were closed last week, and yep, you can see this is the the nice situation here for the sellers that occurred. So basically, the index did drop significantly. It did drop between 7 and 8% here. So basically, from the technical side, you can see that the index drifted towards the low of the of August last year. It did overshoot that, but quickly got back above it, and that's the area near the 2734 mark, so roughly around there. The index did drift a little bit lower here. It tested the area near the 2700 and let's round it up to 717 zone, and yep, then retraced back to the upside. Now, don't get me wrong, this is quite a decent drop in one day. So of course, for now, looking at this picture, it seems that the sell-off could continue, but don't get me wrong, we may see a bit of correction first. So in a way, how we could look at this is if we get a nice reversal here, maybe a small correction back to the upside, maybe towards the 2857 territory. If it struggles to push above this, then well, we could see another round of selling, and basically something like this could be possible. So basically, guys, right now, like this, consider this as a potential idea, because again, we have seen a strong slide here in one go, let's say in one day. So maybe just a bit of correction here could do the trick. Don't get me wrong, it might not even travel towards this 2857 zone. It may find some resistance somewhere around here, even maybe near this little inside swing high here, near the 2829 zone. So in a way, of course, for now, guys, be very careful. If in case this decides not to travel, let's say higher for a correction, and decides to drop lower, what we're going to do here is, of course, we're going to keep an eye on the low of the of today near the 2717 zone. And if we get a nice drop below this, then well, I mean, this could lead towards further declines straight away. And one of the levels for us to consider, for one of the support areas to consider, could be around the 2571-72 zone, roughly around here, near the low of the 31st of January of 2019. So that's why, guys, we are at a very tricky spot right now. On one hand, yes, the slide could continue, given the situation with the coronavirus, and but again, given the kind of sharp sell-off here that we had, maybe we could see a bit of correction first before another leg of selling. For us to consider the upside on this one, well, ideally probably we would like to see a pushback above the 2,960 zone, and only then we will aim for the upside. Until then, any kind of move up could be classed as a temporary correction before another leg of selling. UK, so FTSE100. Now, last week I talked about this one, and what I was saying, to keep an eye on some of these lines here. So especially the medium-term upside support line taken from the low of the 3rd of October, and the short-term tentative downside resistance line taken from the high of the 17th of January. So we saw the index sliding below the 7,393 zone, which was kind of good for the bears, and you can see that the index slid further south. On Friday it almost reached the this upside support line, but if we take a look at the cash index, we will see that actually the index did reach this territory. So basically it did come close to testing this upside line, and well, I mean, right now looking at the cash index, we can see that the index is bouncing back. It's now back above the 7,300 and well, 5 territory around there, so that's where it is right now. But of course, don't get me wrong, this little bounce back up here right now in the cash equities could be seen as a temporary correction before another leg of selling again. But we are at a very interesting spot right now, because on one hand we do have this upside line, which can in a way remain, if remains intact, could keep the price afloat here. But on the other hand, we do have all these fears around the coronavirus, so that's why, guys, be very careful. Keep your eyes on this upside line, this medium-term upside line, but mainly keep your eyes on the 7,223 zone here. If we get a drop below this, now this is where it could turn out to be a little bit more ugly for this for the buyers, and we could see more sellers joining in here and pushing this one further south, maybe even all the way here towards the lowest point of December, initially near the 7,131, or towards the lowest point of October near the 7,000 mark, so maybe just slightly above that, so in 7,004. But the psychological 7,000 could be tested if we get a break of this medium-term upside line and a drop below the 7,223 zone. So for now, of course, the fact that we are seeing a bit of a bounce here back above the 7,300 zone, then yes, it is kind of still okay for the bulls maybe, but on the other hand, if we draw this short-term tentative downside line, we will notice that the price is still below this downside line. So in a way, for us to, let's say, consider at least a bit of let's say a larger correction to the upside, well, a push above the 7,393 zone would be required. This way the index would be placed above this short-term steep tentative downside line, and yep, it could travel above the low of the 27th of January, and as I said, the 7,393 zone could be that barrier, after which we could consider a potential move towards this other downside line taken from the high of the 17th of January. So for now, given that we are seeing a bit of a bounce, that's good, but we are still below this steep downside line here. So yep, keep your eyes on that one, guys. Ethereum. Now, I've looked at this one last week, and basically I was telling you guys to keep a close eye on this barrier first, the 179 zone. So we a break of which we got, and the crypto managed to travel towards the 186 zone. This was what our target initially, but the other target that I was talking about was the 194.70 zone, which is marked by the high of the 6th of November, or in other words, the highest point of November. So as you can see, the crypto did test that area and quickly kind of corrected back down again. So for now, of course, this move lower could still be seen as a as a temporary correction before another leg of buying. So in a way, we are going to remain still somewhat more bullish than bearish, but ideally we need to see a nice good push above the 194.70 zone before kind of considering a higher move here, because again, for now, guys, it's very tricky. On one hand, yes, we are quite extended here to the upside, but for now, let's see if actually what it does here near this area, near this 186 zone, because if it gets a hold up around here, then we could see a nice round of buying again, potentially leading towards the 194 area, 194.70, and a break of which could open the path towards even higher levels. On the upside here, what you could keep an eye on, of course, is this little high here that we had on the 25th of October, and that's roughly around the 199 zone. So good potential target as well, but we will only consider that if we get a push above the 194.70 territory. I do understand it's only about around four, slightly more than 4 points higher, but nevertheless we'll keep it short and simple, given that we are quite we had a quite steep acceleration here to the upside, because overall, don't get me wrong, if it still drops below the 186 zone here, it may travel, it may go for a deeper correction, but as I said, this would still be classed as a correction because we are above these upside lines here, which in a way could provide some decent support later on. If it drops below these upside lines and drops below the 170 zone, then well, we will consider the downside here again. So for now, guys, keep your eyes on some of these levels. AUDCAD, now very quickly mentioning a few pairs. So I talked about AUDCAD last week, and basically what I was saying that in order for us to consider further declines, we needed to see a nice good drop below this this territory right here, the 0.8888 zone. We did get that drop, and we can see that the pair did drift lower. We were targeting the lowest point of October last year, which was near the 0.8830, and you can see that the pair did almost reach that area, but kind of quickly reversed back to the upside and is now balancing near the 0.8875 zone. So I've mentioned this potential move here where we could see a bit of correction. For now, we are still classing it as a temporary correction before another leg of selling, which could in a way bring the pair towards that lowest point of October. If AUDCAD suddenly starts popping back above the 0.8896 zone, well, this is where it could become a little bit more interesting for the buyers, but probably still some of them could wait a push above the 0.8925 level before considering a potential move to the upside here. Even then, I'm not saying that this is going to travel far to the upside, because don't get me wrong, we are still kind of balancing below this short-term tentative downside line, which in a way could provide decent resistance for the pair, and yep, we'll have to take it from there after that. So for now, guys, keep your eyes on the 0.8896 level for the upside, and for the downside, if it continues to trade below the 0.8875, well, we could see another round of selling, possibly bringing this one towards the lowest point of October. GBPNZD. I talked about this one last week as well, and look at the beautiful move that we got here, especially on Friday as well. And well, we managed to reach one of our main targets near the high of the 13th of December, or in other words, the highest point of December, near the 2.0417 mark, roughly around there. It did overshoot it, but not by much. Now the big question here is, can this continue pushing further north? We need to see now a nice good push above this barrier, and let me just quickly highlight it. So basically, if we get a nice push above this 2.0417 territory, then yes, we will consider a further move to the upside. So basically, again, guys, it's pretty straightforward. We need to see a nice good break above this, and maybe even ideally a 4-hour candle close above this barrier in order to consider the upside, because this would confirm a forthcoming higher high, and yep, more bulls could see this as an opportunity to step in and drive this one higher. But this is where the upside could be limited to the 2.0555 zone, because that's the high near the highs of October of last year. So good potential target here, but again, we need to see a break of this 2.0417 area first. In terms of the downside, now again, because we are still trading above this medium-term upside support line taken from the low of the 26th of December, of course, as long as it remains intact, everything kind of any move lower could still be seen as a temporary correction. That said, don't get me wrong, we are quite extended and we have moved quite away from this upside line. So in a way, if this suddenly starts dropping back below the this little territory right here, the 2.0146 zone, then we may consider a deeper move to the downside here, and potentially leading initially towards the, of course, the psychological 2 zone, and then towards the 1.9861 area. So again, guys, for now, that's the kind of game plan. Let's see if this can correct lower, if the area around here, around near the 2.0240 can hold it. If it can, then we could see a nice rebound and a pushback to the upside. But if it starts dropping below the 2.0146, this would also place the rate below the 21 EMA, and yep, more sellers could be joining in here. USDCHF, this perfect move on the USDCHF. I talked about this one last week. Basically, I was talking about this one while we were still hanging around here near the upper side here, near the 0.9763 zone. What I was saying, that if it holds, we may see a nice correction to the downside. So we did get that. We did get a test of the 0.9678 territory, and it traveled even further south, and this is what I was saying, that if we get a drop below this level, then, well, we will consider a possible test of the 0.9623 zone, and if it holds and we get a nice rebound here, maybe back to the upside, all this could be confirming a nice wide range here. So this is what we're going to be keeping a close eye on for now, because in a way, if this suddenly, let's say, travels back above the 0.9678 zone, so from the short-term perspective, we will aim for the upside. We'll aim for that upper bound of the of this little range. But if it suddenly drops below the 0.9623 territory, then, well, I mean, this is where it would confirm a forthcoming lower low, and yep, more sellers could be joining in. And the last pair for this session is going to be the euro dollar. Look at a fantastic move that we had on Friday, and what a perfect way to close January. And this is exactly what I was talking about, guys. So what I was saying, that on Friday, what I was saying, that if we get a push above the 1.1039 zone, this could open the path towards these levels here near the 1.1066 or 75 areas, or it could even travel all the way here towards this downside resistance line taken from the high of the 31st of December. So we did almost get a test of that, but don't get me wrong, not all is lost here for the bulls. We may see a test of this this downside line at some point, maybe if the buying continues today. But if it holds, this is what to consider. This is what we should be considering, because we may get a rejection here near this downside line and a further decline to the downside. So that's why, guys, for now, the main scenario for us is still maybe a little bit higher, but then get a rejection near this downside line and drop to the downside again. But if it breaks this downside line and pushes above the 1.1118 territory, now this is where we could get a little bit more excited with the upside. So that's why don't rush into this yet. For the upside, that's the level that we need here, a push above the 1.1118. Still, again, for now, like I said, we are still considering maybe a nice good test of this downside line, and if it holds, then we could see a nice round of selling. So for now, guys, that's the situation. We're like I said, we'll be very careful and cautious near this area, because it could be quite interesting to see which way that's going to head. For now, we're cautiously bearish on this one. And yep, we'll keep an eye on this downside line. If it holds, we could see another round of selling. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on, my traders' tea time is always 14:15 GMT. For now, guys, I hope you have a beautiful trading day and stay safe, and I'll see you later. Thank you very much, and bye-bye.